Okay, so good evening and yet another mentorship live session. This is 13th of June 2019, Thursday 8:30 p.m. Indian Standard Time. Thanks everyone for joining in again. As always, I will use the first 10-15 minutes to take a look at the benchmark Nifty, Bank Nifty and few sectors. Try and understand what's happened with the market over the last 4 to 5 days, and based on that, what can we expect going forward. Keep your questions ready, and once the market analysis is taken care of, I will take up each and every doubt of yours, trades of yours, like we do always. So we have the Nifty daily chart in front of us. We have the dual chart. On my left hand side, I'll repeat, I have the trend, momentum, the trend and volatility indicators. On my right hand side chart, I'm using the short-term momentum indicators, which we use for timing our entries. So Nifty is range bound. There's no doubt about that. The short-term momentum of the market is slowing down, clearly visible by these dropping AOs. But it's positive, means we are still holding up into a positive uptrend. The trade frame plus one higher time frame AO suggests that the momentum from the higher time frame is still intact and positive. We have a drop in volatility, and now the average range per trading session on a daily basis is sub the monthly average. Close to supports, which is very, very clear over here at 11,800, 11,830, that's the zone. Pattern traders would definitely jump on their seat talking about this possible head and shoulder top. Momentum indicators are midway, not much to give away in either direction. Shoot is on a positive note. Doesn't take much time to reverse the shoot indicator though. So overall, we are in an uptrend. The index is definitely slowing down. And I guess in terms of levels, this is a zone which is standing out, but obviously the 11,800, 830, 40 zone has acted as a support for multiple times. Even today, we got a very nice bounce back from 11,830, 35, 36 levels. On the upside, it's important that we look at the Tuesday's high, which is close to 12,000. It's 12,022 for the Nifty future. So let's work at the psychological level of 12,000. Now, zooming in a little bit close to this Nifty daily chart, we had the first leg of fall, a 3-bar bounce back, and now the market's trying to come down and break this low. So this low and this high are the immediate crucial levels for the Nifty on the daily time frame. It is range bound, that is clearly visible. The trend is positive. Ideally, we should maintain our biasness as a positive bias, but I think a break below 11,800, and if it closes below 11,800, can bring in a lot of damage going forward, and in that case, we might see some amount of a retest of this rising gap that we saw. But overall, I think it's a market where it's been like this for quite some time. Few sectors, stocks supporting the market on the upside, few sectors, stocks pulling the market down, mixed scenario. But overall, I guess until and unless 11,800 lows are broken, breached, closed below, I think we should maintain a positive view. The weekly chart of the Nifty future does not show as any possibility of weakness. There is a hook shaping up on the weekly chart. If we look at the short-term RSI indicator, we do already have the shoot. With one more day to go tomorrow, being Friday, it'll be a very interesting chart to observe. At tomorrow's close, it will be really interesting to keep a watch whether this hook is still intact or not with the shoot. And if that happens tomorrow after close, then the weekly low, which is 11,836, again that close to 11,800 mark, comes into play. Lows, previous highs, resistance becoming support. So overall, the market has enough reasons to bounce back and make a new high. But I guess 11,800 is a very crucial level going forward. The Bank Nifty, on the other hand, is also bouncing back from its supports. This is the daily chart where we can see the range bound behavior of the index. Clean supports coming in close to that 30,500, 30,600 mark. We don't have any signs of divergences of classical nature or hidden divergences shaping up. But one leg fall, a bounce back, and now the next move, it has tested its previous lows. Similar instance here also, a break of these lows, which is close to 30,600, 30,550. A break of these low can lead to fresh bout of selling. The trend is positive, the momentum is slowing down, the range has shrunk a little bit. Weekly charts, nothing much to take away, previous highs acting as current lows, very similar to what we saw in the Nifty, but for the Bank Nifty, we don't see any kind of hook setups or divergences. So the divergences or the probabilistic weakness is shaping up on the Nifty weekly chart, which is not mirrored by the Bank Nifty. When the market went up, it was well supported and led by the banks. And when the market gave a recent sharp sell-off, that was also supported and led by the banks. So it's the banks' financials which is playing a role on both the direction of the market. There's no sign of weakness or slowdown on the weekly charts of the Bank Nifty, so we shouldn't be overly bearish right now. Remember, an NHD, a negative hidden divergence, is a confirmation that the trend is negative. So until and unless we have an NHD shaping up in our charts, we shouldn't be overly bearish on the market right now. Having said that, supports are important, and if they break, there might be a bout of selling, fresh selling coming in the market. Let's quickly open our report designer and quickly run a rate of change on, let's say, over the last 4 days. How did the sectors play out? First, I'll scan the NSE indices, and we see the metals. In fact, there's not much to take away, but it's just the metals, FMCG, and IT, the only three which are above 1% gainer. On the losing end, we have the PSU banks, the small caps, the real estate, autos continue to languish. So nothing much, nothing stands out that well. Metals 1.69% is in a downtrend. Momentum is the only thing which is improving. Shouldn't be too excited about it. FMCG, on the other hand, is better off. It is in an uptrend. Momentum is all positive across trade frame and trade frame plus one. So FMCG is better than the metals. IT, of course, is better than the metals because in this case, also like FMCG, it's in an uptrend with rising momentum. So if you're looking to buy into swing long trades, we can look into the FMCG and IT space for sure, not metals right now. The other side of the spectrum is led by the PSU, small cap, real estate. Not much weightage from these space on the benchmark, except probably State Bank of India. And we notice that State Bank of India, like Bank Nifty, is in an uptrend with falling momentum. Range has shrunk a bit. Take a close look over here, and we will be looking for swing long trades. 337 was this low, 337.55, 336.90, so it's lower. Comparing with this, it's a big intermediate divergence. And this was the shoot, aim and shoot came over here, this bar, which was Tuesday. So Tuesday's high and the divergence bar's high is 349.60. So this is the critical bar for SBI, 349.60 or 350 and 335 on the downside. This 15-point bar for SBI is critical. It will be interesting to realize that it's capped by a rising gap on the upside and a falling gap on the downside.
Abhijit, sir?
Just hold on. I'll just take up your question once I'm done with the analysis.
Sir, we are not able to hear you.
Manish is saying that he cannot hear us. Others? So Manish, please check some issue at your end then. So coming back to this SBI chart, it's got support from a rising gap on the downside and a falling gap on the upside. I think 350 is a psychological level. The weekly charts are intact, are pretty strong. The monthly charts are beautiful breakout. So 350 is the level, sustains above that. We have an entry above 350 as an aim and shoot trigger. The range is quite long, but the overall structure of the chart is really well. So I sense that this mixed performance from the market is likely to stay from specific sectors and stocks. It will be a purely traders market. Wherever we find good high opportunities, high probability setups, we should trade them. Keeping your trades limited to 1 or 2 or max 3 days is good. Positional trades are tending to reverse very quick. So we maintain that strategically, short-term trading, till we find the market back to a new high with strong momentum and sentiment, or breaking down the current supports that we spoke of some time back. So that's for the analysis. Now, like always, let's take up each and every doubt of yours, each and every trades or questions that you might have. Happy to take up all these one by one.